One very KUWL pull quote RLUSD, the $300 trillion stablecoin engine, XRP's $6,000 Shockwave? With 100% cover and 5 billion liquid XRP, the implied XRP price is about $6,000. In the new crypto capital of the world, where XRP RLUSD holds a 1-to-1 collateral ratio as old TradFi derivatives are tokenized and bridged into our new DLT-DeFi world by the killer app known as Stablecoins. What could this mean? Given that stablecoins, newly regulated under the Guiding and Establishing National Innovation for U.S. Stablecoins Genius Act, are the digital dollar-based tokens that are key to the plumbing liquidity of crypto markets and smart contract-driven digital finance, and the RLUSD serves as the NYDFS as first, lawful solution to bridge old, opaque, TradFi derivatives into our new, transparent DLT monetary system. What does this shift imply for the future value of an audited, compliant, regulated, and sound RLUSD under U.S. Treasury supervision? The answer is nothing short of transformational. Let's break down what this shift implies for RLUSD and XRP specifically. Stablecoins as the new plumbing of finance. The Genius Act legally enshrines stablecoins as fully collateralized, regulated, dollar-based tokens. By framing them as the core infrastructure plumbing of digital finance, the U.S. has 1. Elevated them from speculative crypto tools into essential settlement assets. 2. Position them as the legal on-ramps and off-ramps for tokenized finance. 3. Assigned the CFTC's oversight in derivative applications, ensuring that opaque $600 plus trillion TradFi derivatives migrate on to transparent DLT rails. This is not optional modernization, it's mandated infrastructure. Why RLUSD stands apart? Among all stablecoins, RLUSD is uniquely positioned. 1. NYDFS approval gives already one of the most rigorous licensing frameworks in the world. To tie to XRP ledger, XRPL gives instant global settlement, ISO 20020 to compliant, deeply integrated into Replanet and central bank projects. 3. U.S. Treasury recognition gives grants RLUSD legitimacy, no offshore stablecoin USDT, USDC, etc. can match. For crypto capital of the world, origin gives signals intent to make RLUSD the flagship U.S. stablecoin brand, much like USD is the world's reserve currency. This combination makes RLUSD not just another stablecoin, but the legal first, compliance-first settlement rail for institutional adoption. Implications for value. Stablecoins don't appreciate like volatile tokens since they're pegged 1-to-1, however, value accrues in scale, dominance, and settlement flows. 1. Network effect. If RLUSD becomes the default unit of account for tokenized derivatives, commodities, and RWA real-world asset markets, it will control trillions in daily settlement volume. To seigniorage and yield. Even with 100% collateralization, custodial yield on U.S. Treasuries 3 to 5% annually can generate billions in revenue on hundreds of billions of RLUSD in circulation. 3. Liquidity premium. RLUSD's pairing with XRP adds a dual-asset liquidity flywheel where XRP serves as the bridge currency and RLUSD the stable counterparty, reinforcing each other's adoption. Strategic reality. The migration of opaque TradFi instruments into transparent DLT environments means 1. Every derivative contract, repo agreement, commodity future, or FX swap will demand a stable, regulated, interoperable token. 2. RLUSD is already pre-positioned as the lawful candidate, giving it a first-mover advantage. 3. The more Congress, Treasury, and NYDFS enforce compliance, the more RLUSD gains dominance while competitors tether. Offshore stables face existential risk. Bottom line, RLUSD has the potential to become the U.S. sovereign stablecoin standard, operating at the very heart of a $3 quadrillion tokenized global marketplace. While its face value will always be $1, its systemic importance, settlement dominance, and yield generation capacity could make it one of the most strategically valuable financial instruments on Earth, anchored by U.S. law, Treasury oversight, and global liquidity demand. Below is a modeled impact of RLUSD capturing 1%, 5%, and 10% of a projected $3 quadrillion market. At just 1% penetration, RLUSD circulation would be $30 trillion, generating $1.2 trillion annually in Treasury-backed yield. At 10% share, RLUSD would sit at $300 trillion circulation, with $12 trillion annual yield, power numbers that rival or exceed today's entire global banking sector profits. Here's a XRP RLUSD 1-to-1 pairing dynamic under a range of adoption and liquidity assumptions. In plain English, RLUSD scenario equals RLUSD's share of a $3 quadrillion tokenized market in approximately 10 years. 1%, 5%, 10%, $30 trillion, $150 trillion, $300 trillion in circulation. Coverage equals how much RLUSD value must be simultaneously matched by XRP at any moment. 100% cover conservative assumes RLUSD balances are fully paired with XRP at rest. 30% cover netting velocity assumes significant intraday netting and fast turnover. Only approximately 30% needs XRP at once. 10% cover instant FX style assumes extreme velocity and atomic netting. Only approximately 10% needs XRP at once. Liquid XRP supply equals rough bands of actually tradable XRP excluding escrow. Strategic holdings is less than or equal to 5B, 1OB, 2OB, 5OB. Implied XRP price dollar equals required XRP notional divided by available liquid XRP. Even at 1% RLUSD penetration of a $3Q market $30 trillion, with 100% cover and is less than or equal to 5B liquid XRP, the implied XRP is about $6,000. With 30% cover and 2OB liquid XRP, it's around $450. At higher RLUSD shares 5% to 10%, price implications scale non-linearly and quickly enter multi-$1,000 territory unless liquid XRP floats are very large or coverage ratios are very low. Important caveats: these are mechanical scenarios based on a 1-to-1 RLUSD XRP value pairing concept. Real markets will reflect velocity of money, netting, corridor reuse, rehypothecation limits, custody rules, and regulatory capital, all of which lower instantaneous coverage needs. Conversely, collateral, Basel, SEC, CFTC, and NYDFS constraints and liquidity fragmentation can raise effective coverage. The liquid XRP supply is illustrative. If true free float is smaller, prices skew upward; if larger, downward. We're not late in any manner, shape, form, or theory. Godspeed to all. This isn't hype, it's the new financial plumbing being built before our eyes.